prioritizing this time. Throughout the day, we've heard from various executives in the industry on how they've used the Fashion CEO Agenda Framework in action, as well as the role of leadership in furthering sustainability. And now we really want to dive deeper into defining prosperity from both the financial and social lens, and truly talk about how we can push for change and tie it all together. I'm Kerry. I'll be moderating this panel today. I'm Chief of Staff at Pangaia, working on brand and impact. And we have three wonderful panelists with us. Irina van der Sluijs, who's Engagement Manager at ASN Bank and Chairperson of Platform Living Wage Financials. Maybe give a wave. We have Heather Lane, who's the Head of Sustainable Corporate Solutions at Sustainalytics. And we have Chekwas Okafor, founder of ONCHEK. I'd love to pass it on to each of you to do a really short introduction of who you are and what you do. Maybe Irina first.
Yes, thank you, Kerry, and thank you for having me and including finance and the data providers in this wonderful event. What an inspiring first panel you had already, and so many participants. Maybe it is exemplary for a tipping point we all feel is coming for real systemic change post-COVID, not only in fashion, but throughout the sectors. And I must say, I really long for that, because in my past 20 years of working in the responsible business conduct and ESG, the environment, social governance, finance term jargon projects inside of the system, I think we've achieved a lot with multi-stakeholdering and soft law and voluntary initiatives. But I also think we crave to go beyond the pledges and the promises and the pilots for real impact and mainstreaming all of this. I think if I talk about system, I talk a little bit about capitalism. And by all means, I don't want to abolish that, but I do want to see collaboratively if we can soften some of the sharp edges of capitalism and really move into stakeholder capitalism. Iron out some of the flaws in the old system by putting in that social floor base to secure social inclusiveness, but also put a roof, a cap on climate and natural boundaries. And I know it's easier said than done, and that's why I emphasize we have to all do it together, finance included. And it will hurt also a little bit, but in my personal and professional life, I sometimes feel if it hurts, then you really hit the core and then you're working on something fundamental. So in this afternoon panel with Heather and Chekwas, I look forward to talking about possibilities, how finance, and I work for a more value-based bank, and I can give examples of how we really integrate ESG to the core. For instance, with the dialogue on living wage, a fundamental human right with the fashion industries, and to change the models in that sense, but also how we collaboratively can better out the balance between financial and social returns by, for instance, lobbying governments to do their job and to enforce that normative framework and not lobby against that. We really need that legislative policy smart mix. And last but not least, I think for all the CEOs listening, you're not in this alone. We should be all leaders and CEOs in our own respect, and hopefully with a bit more compassion, fun, and also empathy. I was reading over the weekend Jamil Zaki's book, The War for Kindness. And I do think we need some of that kindness in those overly efficient production lines we created. And what a creativity there is in the financial sector. Let's use it also for better the economics of this sector. Thanks, Kerry, for this.
What an intro, and so many points I want to talk about in this conversation today. Heather, maybe you can do a quick intro also about you and Sustainalytics.
Sure. So my name's Heather Lang, and I'm the Executive Director for Corporate Solutions at Sustainalytics. And for many of you who might not be familiar with Sustainalytics, we're a global ESG research provider. Acronym for ESG, which I'll be using a fair bit throughout, is environmental, social, and governance. And we're really focused on supporting responsible investors, institutional investors, to make informed investment decisions that incorporate environmental, social, and governance criteria into their decision makings, into their products, into their services. We've been active in this industry for over 25 years, and I've been with the company for about 16 already. So have really been part of the growth and development of this industry. And today I'm going to speak to you more about our sustainable corporate solutions. I know we have a lot of corporates with us on the call today, and in that capacity, we've really built up a practice working more closely with the corporates that we've been researching for many years, but helping them to develop frameworks and approaches to access capital linked to sustainability. So, for example, we are the leading global provider of second-party opinions for green, social, and sustainable bonds, and we've worked with a number of companies, well, with hundreds of companies over the year, including hopefully a couple within this industry and on the call today. And I'm going to talk a little bit about that, and really, yeah, my focus today will be on accessing capital, on the opportunities that are available to companies in really more proactively linking financial instruments, financial opportunities to sustainability initiatives. Really look forward to the discussion. Thank you.
Wonderful, Heather. And last but not least, Chekwas. I mean, you're a CEO, you've built a company from the ground up. Love to hear a little bit about your story quickly.
Well, thank you very much. My name is Chekwas Okafor. I am the founder of ONCHEK. I started a company with the sole purpose to create jobs. So first step was we started ONCHEK.com, which is an African luxury e-commerce company. And then 2-3 years later, I came back to Nigeria and started a t-shirt brand. Because I felt that was the way to directly employ a lot of people. So I was obviously spent a lot of time talking about that aspect of the supply chain. Being a brand, we have a local brand, which is Merok, being a brand and also manufacturing. So we are sort of like the gatekeepers in the supply chain. So, when we get funded and we have living wages, we're the people that probably should, will be implementing those things in a way that environmentally friendly. So I'll be speaking in that capacity as well as a manufacturer as well. So I look forward to connecting and sharing my thoughts on that.
Wonderful. Well, let's get started. To kick off the conversation, I'd love to set the baseline. So the Fashion CEO agenda sets a vision for the fashion industry and, of course, addresses some of the most material topics for the industry and investors alike. Irina, maybe you could talk to and kick us off on why does the financial industry really need to define prosperity broader than returns on investment and profit and the traditional take on the bottom line?
Yes, thanks, Kerry. Yes, so in my introduction already said that it is really valuable to keep on working and pioneering, fleshing things out inside of the system, but we also have to shake the system up a little bit and soften the edges. And I think working at ASN Bank here in the Netherlands, we are pioneering in the sense that we put ESG first, so the environmental, social, and governance criteria first. So I can give you a little bit of an idea how we work. By the way, we is the sustainability department that consists of 12 people out of a very modest-sized bank, 150 people. So that also shows that we hire the expertise. So we want to be the engagers that actually know what we're talking about. And so we first apply our stringent ESG criteria to projects and possible investees. And then we give over that batch over towards our portfolio managers who think about, well, what would be financial returns in this batch to choose from. So that's different than most other financial organizations. Also, we determined long-term goals, not only on human rights, which is the living wage, I'll be talking about that, but also on climate positivity, actually. We want to extract more carbon out than we put out there, and also on biodiversity, no net loss. And so we have formed partnerships on carbon accounting financials and biodiversity accounting as well. And in that sense, we are pioneering and getting also more mainstream investors along the way. But to zoom in a little bit on the meaningful engagement that we have already now for 4 years with around 31 investees in the garment and fashion industry. The reason we focus on that enabling human right of a living wage is that we as a financial sector are also asked to do our due diligence. So our saliency is in the sectors, for instance, the fashion, but also in the food, agri, retail, and the endemic low wages there. And then we said, okay, there is not yet so much data out there, so we're gonna do ourselves create a method. So, and that is still quite unprecedented, that we have people also in the 16 other financial organizations that are part of our platform, representing 2.8 trillion euros assets under management and still growing. We started in Holland, but it's growing to Amundi in France, BMO in the UK, and Swedish and Norwegian partners coming to the platform. We use that method to assess our investees on how they perform on living wages, and we use that every year, and we communicate that openly always on the website livingwage.nl. And we also consult regularly our friends of the platform, which are NGOs and academics. So we get all the new tools and tricks also in the engagement talks. And I think the reason why I call it meaningful engagement is that we deep dive in it. We annually assess, we have really profound expertise talks with many of them listening in, I think. And we also are not afraid at ASN Bank to say at a certain point we divest if there's no progress. And I think that's the carrot and stick we have as an investor. And of course, divestment is a big stick, but on the other side of the spectrum, and that's also the UNPRI asking us to do that, active ownership, and really be somebody, like for instance, Deliveroo the other day. It went to the stock, but then some of the shareholders said, no, we don't trust the labor rights in this company. That's a good example of active ownership, and that is something that the finance can do even more, I think. Yeah.
Great. So many different pieces there. I think one to pull out, to summarize on prosperity, is more than just financial returns. It's also climate positivity, biodiversity, and also the social aspect.
Yeah.
And to tie that into Chekwas and what you do, I know you just mentioned before that you hadn't really heard the term ESG before, but what's interesting is that the work you've been doing for the last 10, 15 years has really been centered around ESG. Can you talk about your take on prosperity and your story in Nigeria as well?
Absolutely. So my true north has always been, how can I create as many jobs as possible with whatever I could. That's how I landed into fashion, and that's when I saw the opportunity to actually manufacture. I went into it because I went from hiring 2 people with my luxury company to getting to like 100 people at this point. So it's been my true north to create jobs, and at our company, our employees come first, and that means a lot. In the fact that these are typically the vulnerable people. This is not like the most educated people who already know, what's expected of them or their rights and things like that. So that's why you can see a lot of bad behavior in some companies go, relatively unnoticed. But I think knowing that we want to create sustainable jobs, we put people first because one, it's made us more efficient than any competitor. It's made us, we have less call-off days or sick days just because people enjoy coming to work. When people have to travel, they feel bad because they're not going to be at work. So I think we've built a culture where they feel that they are important, and obviously putting people first by default puts at least the social part of that ESG goal in the forefront. And coming from an environmental background, I actually have a minor in environmental science. I worked in environmental health and safety field and manufacturing. So I brought that sustainability. I also brought the safety aspect of it to my company. I used to hold people accountable for being environmentally cautious. So now it's my company, I have to do that. So absolutely, I might not have known the term, but I think hearing about people, when you put people first, all these other things fall in place. You try to figure out, how do you pay them well? Do they have health insurance? How do their family, because a lot of these people have a lot of people dependent on them, even though they're 18 years old, right? So when their family gets sick, who covers for that, right? So those are things when you put people first, and it comes from the leadership. Every other thing sort of follows because people make the company, and if you treat people well, it sort of turns around and the company treats you well as well. So that's my thought on it.
Great. And I love the point on leadership, right? Because they're the ones that really set the vision and the actions that flows through the entire culture of the company. And Heather, you mentioned you've worked 15 to 20 years at Sustainalytics. So I'm sure you've observed so many different trends, what's worked, what's not work. Why haven't we really cracked the nut? Why are we still trying to convince people to make these hard decisions and really put more leaders on the front page?
Well, I'm going to look at the glass half full. That tends to be my approach. I mean, I've seen us make some incredible amounts of stride over the time that I've been in this industry, from the time that, that we started engaging with companies as research analysts, to develop reports for investors on environmental, social, and governance. We didn't get a lot of buy-in. We didn't get a lot of disclosure. We didn't get a lot of information. And it was, it was a real push to get the information that we needed. And over time, I think, fast forward about 10 years later, and we have companies literally banging down our door and saying, "Hey, we want to tell you about the latest initiative that we've done." And the reporting, the disclosure has obviously gotten so much better over that time. And we're also seeing companies starting to use their ESG ratings in ways that we never saw them use them before. Historically, it was a bit of a black box for companies. The ESG ratings on them, they fed into the research process, but they didn't actually, benefit from the full output and have the actual opportunity to leverage those ratings for their own use cases. And so I think that's one development that we've seen. There's been more transparency. Our ratings are now available on our website. Companies can use them in a variety of different ways. We're seeing companies linking executive compensation to our ESG ratings, which is groundbreaking. We're seeing companies starting to assess their suppliers and provide, preferential procurement or identify red flags among their supply chain based on our ESG ratings that they're requiring their suppliers to get. So I think there's been a tremendous amount of headway. We still have a ways to go. But yeah, I think really the collaboration, the fact that this is mainstreaming, this is no longer a niche part of the industry. We're seeing some of the biggest investors in the world starting to expect this, and we're seeing some of the most influential companies really demonstrating their leadership. So again, I think it's all relative, but we have made a lot of progress.
Can I ask a question, Kerry?
Yeah, go ahead.
I think, Heather, we kind of started in the business at the same time, because I can only echo what you're saying, indeed, with what you're describing, that it is going to be more the new normal. However, I do a question for you. Do you agree also with me that the S of ESG, the social side of ESG, that is only the last years that came up? In my own experience, and also some of my colleagues in the finance world, the E, the environment, was easier to quantify, was easier to find a business case. And with the S, you have so many human rights. I mean, human rights go back, foundation of ILO 1919 was fair remuneration, and we're still discussing, living wage benchmarks, etc. But it hasn't manifested so much in the social realm, and there is so much linkages as well between the social realm and the climate. I mean, I'm working on the whole dossier of the solar panels and the Uyghur forced labor in China. So I mean, it's green and it's forced labor. So do you think that when we look at the future, we have to deep dive more in the social realm and in the interlinkedness between climate, nature, and social?
Yeah, absolutely. And this is something I've been saying for many, many years. And I think the challenge is, as you pointed out, Irina, is that it's hard to quantify, and that, because of that, it's hard to measure, it's hard to report on, it's hard to compare across industries. And so, yeah, so there's a lot of gray in there. But yeah, I think maybe if you shift over to the bond side of things, which is what I'm more connected to these days. I mean, we have seen, so green bonds have been very popular for a number of years. We've seen a lot of green bond issuance, very clear, very direct impact to, reducing GHG emissions, increasing renewables, green buildings, etc. Social use proceeds were, what was a smaller area of focus within the market. We really saw that pick up in the last year alone. I think COVID was a little bit of a trigger to see more of the focus on the S in ESG. We saw that the market responded and really addressed some of the key, socioeconomic impacts of COVID, impacts on employment, impacts on financial inclusion, access to healthcare, etc. And also starting to see those linkages, as you mentioned, between the environmental and social. So that's where we have sustainability bonds, which include both environmental and social use of proceeds. We saw a rise on, in both types of issuance in the last year, significant compared to what we had seen in previous years.
Kerry, if I might just ask, I don't want to draw this out, and Irina or Heather can answer this. What have you all seen from, that's the challenge for that? What has been the biggest challenge for the social part to be difficult, even from the supplier side, not necessarily because I'm asking, it doesn't seem like it's that difficult, but I don't have 10,000 employees, so I'm pretty sure I might grow into that problem, right? So is there anything somebody like me should be aware of that has been the challenge? Why this S part of the ESG seems to be a bit challenging?
Yeah, thanks for that, Chekwas. And I don't have 10,000 employees either, so I just can speak a little bit from a distance as well. But the fact that you can quantify carbon emissions, etc., and you put it in Excel, and bankers love Excel, so that's easy part. Well, easier part in that sense. The social part, as I said, I think out of the 33 articles in the Human Rights Declaration we have, and all that the covenants that came after, and declarations and UNGPs and the OECD guidelines, etc., you have for your own sector and business to do your due diligence and say, okay, what is the 1 or 2 or 3 main areas in the social realm that I'm going to focus on? And if that, for instance, is wages, you have to also deal with freedom of association, and it's interlinked, usually 2 or 3 of these social themes. And then the data out there, of course, is one thing, but of course, you mentioned the supply chains. The investees that we work with, they don't pay a salary to workers. They pay a price to a manufacturer as well. I don't know how your supply chain looks like, but so they have to use their leverage as well. And luckily, a lot of the investees and a lot of the people on the line are probably listening in, they are working together. So you have to have leverage as an industry as well. But then also, to mention the white elephant in the room, investees go to these places because of the low wages as well. I mean, not always, but it's part of the whole package. So we're actually asking them to tweak exactly where it hurts, to change the business model a little bit, and to have open costing models. And that's not easy. That takes time to transition.
I think what's really interesting to take away from all of this is that you guys are pretty much on the forefront, right, of sustainability and social and ESG, but we don't have all the answers. We're all working our way through, and it's progress over perfection. And I really, really hear that. One question also for Heather, I know you mentioned green bonds earlier. Can you talk a bit about the latest green bonds with H&M? And I know they mentioned on the other panel, and you brought it up as well. We'd love to hear more how that was structured.
Yeah, sure. I'd like to talk about that. So as Helena mentioned on the previous panel, and I was planning to highlight as well. I guess maybe just to take a step back, we've worked with issuers across a number of different industries over the years, but we just started working with apparel companies in the last year or so. And VF Corporation was actually the first apparel company that we worked on a second party opinion for their green bond framework. And earlier this year, we had the opportunity to work with H&M. They issued a sustainability sustainability linked bond. It's a little bit different from a green bond or any type of use of proceed bond, in that the focus is on, on general purpose financing, but the coupon rate of the bond is actually linked to key KPIs and sustainability performance targets that are identified by the issuer together with their underwriter. And so in the case of H&M sustainability linked bond, which they just issued back in January, they identified 3 specific sustainability performance targets that they want to reach by 2025 compared to a 2017 baseline. The first is to increase the share of recycled materials to 30% of total material inputs. The second is to decrease scope 1 and 2 emissions by 20%. And the third is to decrease scope 3 upstream emissions by 10%. And so we, Sustainalytics, as the external reviewer, assessed those specific targets as ambitious, really quite ambitious relative to what we've seen in the industry, and also very relevant to the company's core sustainability strategy, which is another thing that we really look to, and we know that our investors are looking at as well, is alignment of what the company's bond framework is in relation to the issuer's overall sustainability commitments and strategy. So yeah, we were very excited that was the first sustainability linked bond to be issued by an apparel company, and I hope we'll see more of those to come.
What are some of the barriers for maybe smaller companies like the size of ONCHEK or others to also create more sustainability bonds like that? Why is this the first one?
Yeah, I think it's really, the challenge is scaling. Really, you have to have a sufficient amount of assets to finance through the bond. And so, one way, we do tend to see the larger cap companies doing this overall. We also see that with use of proceed finance, you can target multiple different categories at once, which is why many companies are issuing sustainability bonds that could have multiple environmental categories, multiple social categories, and really be able to scale things up more. But I think other opportunities that are accessible maybe to smaller companies that may have a challenge issuing that type of bond right now would be to access a sustainability linked loan, for example, through as either a bilateral loan from a bank or as a revolving credit facility, and be able to get preferential interest rates from a bank that really is forward looking and positioning itself well on sustainable finance. Get favorable interest rates if you can demonstrate to that lender or syndicate that you are improving on your sustainability performance, either with respect to a more holistic ESG rating or with respect to specific KPIs that are material to your business.
And is there a possibility, Heather, to link the workers and supply chains to all of this, maybe with microfinance?
Yeah, I mean, I think in the social bond space there is, one of the, some of the categories in there really align themselves to small to mid-sized enterprises, to suppliers. I don't think we haven't seen a lot. We've seen a fair bit on the sustainable procurement side, but more with an environmental focus, circularity, material inputs, less so on the social side. So I would say that there's a definite opportunity for some innovation and leadership there.
Wonderful. I think one thing also to touch on, we've talked a bit about environmental as well as social and how difficult it is when it's difficult to track the numbers. Governance, we didn't touch as much on. So next week, actually, GFA is hosting a policy event. And I'm curious to hear from each of you, what is the number one policy change that would help your company accelerate its work on improving the environment and also on the social labor aspects?
I can start still generally, because we are environmentally conscious and we have people in front and we think about environmental causes. ours is just challenging for a startup, right? It's just challenging to even scale, because the reality is how many suppliers do we have? We don't even have up to 3, right? So, and you know, I cannot necessarily vouch for the environmental stance, but I don't have a choice, right? So if people like us that are going, that have sustainability in mind, that are growing, we're feeding the local market, we're actually like number 1, number 2 in the business, there's potential to grow. So I think the policy in our case is just to find people who are doing the right thing and back them. And that's just challenging for, you know, Nigeria is not known for a garment industry or anything. So that's just something we have to deal with. Maybe the policy, I mean, you know, I hope that the policies will come in to support people who have ESG goals in mind, and the government can support that or have policies to support that. But at this point, it's just not there. So we basically have to kind of line ourselves up with like maybe investors, more especially maybe impact investors. So at this point, you know, I just, you know, if there can just be policies to support growing businesses that have ESGs and on top of mind would be very helpful. But it's just, you know, I don't see that happening anytime soon in my country.
Well, good question, Kerry, and interesting indeed. So if you talk about corporate governance, and that's the G in ESG, I suppose, we always check, of course, if there's board level commitment on these ESG issues. And yeah, I think maybe some more ownership, again, bringing it really to the core and to the top in the company could really help. Diversity issues, of course, gender is a big issue in fashion and supply chains, gender pay gap, all of that should be definitely coming more into the core of the business. But if you ask me this question, Kerry, then I'm also thinking about, again, that CEOs and boards don't have to do this alone, and that governments should really now do their job and put in those, that normative framework that is now soft law, and put in that smart mix of some harder law. And they have been doing that in Brussels for the finance sector. Yes, Sustainable Finance Action Plan and Green Taxonomy, working on social taxonomy, which is really good. Then there is, of course, the initiative of Commissioner Reinders to come up with a mandatory due diligence, both on environment and human rights, in the EU. But we have to also be careful that it's not just a ticking the box exercise, and that we really are clear what we're then asking companies to do. So I would really be, a proponent for a mandatory due diligence law that is theme and sector specific, really, and really make sure that you ask companies specifically what to do on these various themes. So yeah, basically, and to the corporates listening in, don't lobby against this. This can be your advantage, level the playing field, you know, it's time to go there, yeah.
Yeah, I guess just to, you know, to speak to our business line, I mean, I think a lot of the regulatory developments are already underway and taking effect. I mean, especially in the EU, where the regulatory environment has been moving fast. And so, for example, the EU's non-financial reporting directive, which requires EU corporates to disclose data on their firms' ESG factors, I think will help us by providing more consistency and comparability of ESG data. The sustainable finance disclosure regulation, and all aspects of the EU Sustainable Finance Action Plan, actually, and taxonomies and the tools that are going along with it, I think are really adding more credibility to the work that we're doing, and also are really, you know, providing that extra incentive for companies to cooperate.
Great. I think for all the listeners out there, it's exactly what, or also Irina, you mentioned, it takes collaboration. It's not, the onus isn't just on one, but it's on all of us to call for action and to ask for more transparency, more due diligence, more guidelines out there so that it is comparable. On that point, Heather, you mentioned before that there's more attention also and awareness to sustainability. Has data and transparency and all that information also improved over time in the last 10 years, and how has that changed?
Yeah, so I think, I mean, as I noted, we're seeing better disclosure from companies, and that's, thanks to a lot of industry-wide initiatives like the GRI, like SASB, like the IRRC, to name a whole bunch of acronyms that you may or may not have heard of, that are really providing sort of the guidelines for what companies within a given industry would be expected to report on. It's not just about, how much they're reporting, the volume of the reporting, but it's about reporting on what's material, and that's where things have really evolved. We're seeing companies really, unpack what those material areas of impact are for them as a company, given their business model, given the regions in which they're operating, and really reporting on what matters the most. So I think that's been an important development. And again, we're starting to see these ESG ratings being looked at more broadly, even alongside a credit rating, to inform investment decisions. And so, with that in mind, companies are getting more questions from their investors. There's more scrutiny, and they feel more accountable for the ratings and for the reporting that goes into that. And we've certainly seen a lot of enhanced motivation to engage in our research process since we made our ratings publicly available on our website. Companies are keen to look up their own rating and understand that, unpack it a little bit more. Also to look at the ratings of their peers and understand where they fit in relative to their peers, and will often reach out to us, and then we can explore further opportunities to work together to better understand where there may be gaps, for example, in their performance and relative to some of their peers or to best industry practice, for example.
Yeah.
Heather, the question is, when you say companies, they're mostly like brands, or is it just brands and retailers? Like when you say companies, it's typically like big brands, or is it more than that, or is it like supply chain or?
Well, yeah, no, that's a very good question. I mean, historically, we've focused mostly on large cap publicly traded companies across all industries and globally, but we have seen a lot more smaller cap, even in many cases private companies coming to us in the last couple of years and wanting to get rated and work with us. So it's not only not only the largest public companies anymore. It's certainly those ones.
Yeah. And also in my experience, Chekwas, again in that wage area that we work with quite extensively, we see that, for instance, some of the smaller not listed companies working together in, for instance, a Fair Wear Foundation or in other multi-stakeholder initiatives, and maybe you know them better than I do, but that some of the pioneering work they're doing in a more safe laboratory, because it's not so huge in sense, volume, that can really be an inspiration, and we use it in our engagement with the larger companies. So I think we can all learn from each other there. Yeah, but although I agree with Heather on data and reporting, I do also want to emphasize that it is still humans at work here. So we also should sometimes go beyond data and reporting. And that is what I want to really call CEOs on, to be more relaxed and transparent with questions, and also say something that you can do. I mean, yeah, why hide behind, only shiny reports, although lots of it is true. Just say also something, push back, like this I can do and this I can, but be a little bit more relaxed and transparent about these issues, because we all have to figure out this jointly together. Yeah.
That's a really, really great takeaway. And I think it, like you said, it's all about collective action. I'm just looking at the time and we have around 5 minutes left. So maybe I'll mention some audience questions before we do a wrap up here, if that sounds great to you guys. The first one for Chekwas, what difficulties do you face as an entrepreneur focused on job creation in Nigeria, and what do you need to grow your company further?
So very good question. So obviously, just like any other business, there's just a lot of difficulty. But for a company like us, that was like we're actually the first indigenous brand making basic wear, even though we've had the supply chain for 60 years. But some were able to crack the code, and that was challenging. But at this point, I think we figured out people, which was very hard for a lot of people. But for a company that cared about people, it was relatively easy, right? We figured out when you put people first, training figures itself out. Efficiency figures itself out. So now our biggest challenge is just capital or access to capital. In our world of manufacturing, the venture capitalists don't fund manufacturing. It's just clear, right? The multiples are just not there. It's not sexy enough. It's not tech. So it's very hard at this point to sort of kind of grow past where we are at this point, just because working capital challenges. So that's sort of what we're dealing with. We have great people, which was the biggest challenge. Who've been around, who love their job, which makes me happy every day. We have great quality. So at this point, the only challenge that I'm dealing with at this point is, just working capital and, knowing that capital for manufacturing is just tough. And we're not a tech company. We don't try to hide behind tech. We're making clothes in the real world. So that's a challenge I'm dealing with right now.
I hope that more venture capitals see how sexy or interesting the manufacturing side is. There's so much innovation as well that can be put into it.
Absolutely.
Yeah. A question for Heather. So you've been conducting ESG for countries around the globe, and you probably have seen many unique insights. What are some of the most promising sustainability trends, and what do you find more worrying?
It's a good question. I think, and probably this isn't news to a lot of people on this call today, but I think for me, when I started in this industry, 16 years ago, I was an analyst focused on retail, food, and apparel sectors, and really, focusing on supply chain issues, and so I did that for a number of years, and then kind of shifted course and focused on some other things, and coming back and just, even in preparation for this panel today, and also in learning about some of the clients that we've worked with in the last year. We worked with H&M, with VF, with Adidas, and with Burberry. Finding out what's happening in this industry is really exciting. I was really excited about the circularity, and I think there's been an incredible amount of progress from the sounds of it. I mean, in terms of how that's developing, and that's something that really excites me. I mean, I have a 15-year-old daughter who's talking about circularity and distinguishing between fast fashion and quality fashion, and so I think that the fact that that even at that age group, people are thinking about it, and that this is really striking a chord, is really a great sign. On the other hand, I was a bit disappointed to see that, for example, on the human capital side, working conditions, living wage, both within companies' own operations and within the supply chain, it seems like in some ways we haven't made as much progress as I would have hoped for. We're still having a lot of the same discussions. I think that a lot of companies aren't necessarily thinking about human capital as part of their ESG narrative. I figure they must be tracking a lot of this internally for HR purposes, but it's just not making its way out, and so we're not positioned to really understand what's going on. And so tremendous amount of innovation going on in some regards, but still some of the same hurdles that we've faced a good 10 years ago.
I think the main takeaway today is there's been obviously lots of progress, but there's still so much more to do, and for all of us. And of course, there's hope in the next gen who are demanding from brands, from government, from everyone to be citizens rather than just consumers. So I think that's really inspiring. We have around 1 minute, so I would love to, of course, fit in a question for Irina, but maybe we do a round, starting with Irina on action items. What are you going to take away and hold yourself also accountable to, and as a next step in terms of furthering sustainability, whether professionally or personally?
Yeah, so I think I think we're on the right track, and I like also the glass is half full, and let's make it just fuller, and continue working inside the system in innovative, creative projects to really integrate ESG areas to the core, but also indeed push a little bit so we broaden the bandwidth of the system so everybody can be included. And my takeaway is that I want to have separate calls with all of you to go even deeper into these issues. But yeah, I guess the platform Living Wage Financials and the other partnerships that we co-created is open for any investor or to join. So the more the merrier, and the more leverage we'll have. So find me online and maybe we can have a talk. And also, personally to keep a nice work-life balance, because I think sometimes some leisure and relaxation and laughter can bring up some creative ideas that we desperately need also in the workforce and field. So thanks for this panel today.
Maybe 10 seconds from Chekwas and Heather both. We're a little past time, but would love to hear from you on a key takeaway.
Yeah, absolutely. So key takeaway is obviously spent a lot of time talking about ESG, and it's been clear that the S part has been a challenge. So as an operator, as a manufacturer, and the other manufacturers out there, if it might be challenging, but I think if you just care of, put people first, it can actually help the brands and these companies that, to kind of act accordingly, and that detects price, that detects cost, and all that. Just put people first. It's definitely difficult, but I think that will help. That's people, because we're the gateway. We're the people who are employing people. So that's basically it.
Great. And last
very fast. Yeah, I hope to work with more companies on this call, more fashion companies, more apparel companies to link their sustainability initiatives and unlock new pools of capital and to really innovate in types of the targets and use of proceeds, maybe delve more into the S, delve further on the circularity and really to help build up sustainable finance in this industry.
Super. Well, thanks to everyone for tuning in. The next session will be from NGOs on the importance of collaboration and collective action, also touched upon here, but thanks to everyone for tuning in, and take care.